Good afternoon. This is Julie, J-Auto Trading Strategies. It is Wednesday, May 9th, 2:58 p.m. Chicago time. There's only a couple of minutes left in the RTH session. The electronic session has about another 15 minutes after that. But I wanted to show you the difference between the chart patterns between the Nasdaq, the YM, the Russell, and the E-mini S&P 500. And show you that the Nasdaq is the leader of the four indexes. But we're coming up, let's just talk first about the wedges. All four indexes have been consolidating since late January, February. So for the last 2, 3, 4 months, February, March, April, May, we have been in this consolidation pattern. And the Nasdaq is the leader, breakout leader. We have broken our wedge. Looks like this could be referred to as an inverse head and shoulder versus an actual head and shoulder, which I was afraid of happening. To the downside, we had a very interesting inverse head and shoulder setup, and it did break out. We are coming up into this gap line though. 72, 73.50 that will act probably like a brick wall the first time it gets up there, just under 7,000. And then if it clears it, it's got to get through that second gap line right above it. I'm sorry, getting a non-responsive state. There it is. Oops. Clicking too many things at the same time. And then we'll have to get through that second gap line to fill it. And then right above that is this downward volatility. So it's going to not be a smooth sailing breakout. It's going to be a bumpy breakout. And the price action today in the trade room was very bumpy on this. We'll look at the intraday charts in just a second to show you a good way to navigate around and wait for the opportunity. Today is a perfect example of waiting, sitting on hands until the opportunity presents itself. There's really no reason to be in a hurry. We're not going to miss anything, and I'll show you what I'm talking about in just a second. But first, let's look at the E-mini. It has not broken through 2,700. An even number is keeping this depressed going into tomorrow's CPI report. Obviously, there's not been any inflation. The PPI showed no inflation, so that's what gave us that pop-up today in these markets. But we're coming into this down volatility and on this wedge. So we haven't made this inverse head and shoulder, has not really made it out of the wedge. And again, it's going to run into, well, a little tiny baby gap. A gap is a gap, though, on a daily, but tiny baby gap. But it's got this downward volatility that it's going to run into. I'm more concerned at making it out of this channel without turning around because we're coming into the May go away. And so I just don't want this to turn around and come back. The Russell, well, the YM also looks weak. It kind of is a funky wedge. It had the wedge and it already broke out of the wedge, but failed, came back inside, made that right shoulder for the inverse head and shoulders. And now it's done its second breakout, but again in this down volatility level. And it is the least of the three, the Nasdaq, the ES, least range today to the upside. So very tiny range, very compressed trading, just a little bit over the zero line. So we've got CPI tomorrow, and if there's no inflation, then that is going to be a good story for us to get it up to the top of their channel lines. going into Friday, but I'm kind of cautiously optimistic that we're on the right path now in all of these markets. We do have this downward volatility um, in all of them. The Russell looks like it's a good market. I would trade the Russell because it looks like it's at the top of its range already, got to the top of the channel and about to hit the wedge line, and it's got a fair distance to go into its flat volatility. So I think the small caps might be the best next one to break out, but the NQ is well on its way if we can get past this gap area. So watch the gap, and hopefully they usually will. It'll act like a brick wall, like I said. First attempt, it's going to hit it, and then it'll come back down. So we'll just have to watch and see how it reacts at that gap once it gets to that level. Intraday, let's take a look at the 3 minute. We can see that we've gotten our levels very much of a breakout mode. Not a huge range expansion breakout, but still, it was great to see the green on the screen. I got a little bit nervous this morning because it was all red. And let me back up and show you something that we were facing in the trade room this morning. Here was the open at 8:30, and I spotted the pattern immediately, and my heart sank because I knew that we were in for a couple of hours of crap trading, and that's exactly what we got. And that's right there. Anytime you see these Keltner channels, one going up and the other one going down, that is called a megaphone pattern. You can research that, and it is just a bear of a pattern. There's nothing really to do except what the pattern says is you sell the top and you take it to the opposite channel band. And then when it gets to the opposite channel band, it'll come back to the middle and then maybe to the top or maybe back to the middle, but it just bounces around as price tries to get a direction. And it's just a really terrible pattern to get stuck in because you just chop yourself up. You think that you're getting like a good reversal um, candle, red, white, that's going to lead you to a target, and it just slams back on you. And sure enough, it's just, I don't like those megaphones. And it took a while for this to resolve, got down to the pivot point, and then finally broke out. And look what happens. The linear regression allows all the green bands come, and it's like unlocking the locks, and the price action then can just start taking off. So here is that section of when the linear regression on my 3 minute chart showed the breakout, and here on the lower time frame is exactly where, and this is what the image you need to have in your mind. The super trend bands are all white, leading up, staircasing. You're above your Keltner channel on my template and above the larger EMA. So this is picture perfect of what you want to see as far as a chart pattern to get behind these moves, and then start taking. These are the ones that you want to wait for. So just sit on your hands during the red part, or not, you get some signals but not all of them, and wait for your signals. And sure enough, I mean, this is just, I can't tell you this is exactly what we want to be seeing. And even if you don't get to your order entry in time to take one of these that catch the exact reversal, just get in the flow, because once that order flow starts, that's when you can just jump in, and it's like jumping into a swimming pool. That's where you can just take your order up and trail them. I mean, allow yourself to not panic for every red candle that you see coming down, because you've got your other confirmation that now the order flow should be working. It should be looking like this on your screen, all green, the way I have my market analyzer set up. So you won't have any hesitation whatsoever to take it either on your high-low 1 or your high-low 2. But I wanted to show you the high-low 1 because it was such a good pattern today, and have the template set up to take those trades for you in Raven, or just take them manually with using the ATM and NinjaTrader that NinjaTrader gives us in their platform. So let's take a quick look. Crude oil had a little bit of a struggle also this morning, um, taking off after the Iran announcement yesterday. It did finally get going, but I have to say, I will show you a 30-minute chart. Um, the momentum is coming off these highs. At first, we struggled getting through these high levels from the Asia session. Um, could not get through those. The wicks came in, sent it back down to the Asia low, and or the European session low. I forget which one this was. I guess the European session low, and then finally took off, but didn't get our signals until 10 o'clock in the morning. Really had a few earlier signals, but they fizzled out quickly. Got the red band like almost immediately. So um, let me show you the 30-minute, and I will show you that divergence that I'm looking at on this high. And so you can see this momentum divergence off this high is coming down drastically, um, and very little upside green on this. So I would think that this is going to be flattening out and maybe coming back a little bit in for a retracement in the near future. Not quite sure how much upside we have. We've gotten mixed signals on this situation. We've got several things going on. We've had the Kingdom of Saudi Arabia indicating that they were going to make up for any shortfall deficit from the U.S. sanctions on Iran oil entering or being in the market. So that shortfall would not have an impact on the market price. And also, there's been Twitter happenings about China still going to be buying Iran oil anyway. So not sure how that would affect our oil price, or how that's going to impact anything. And then you have the other Twitter indications that France, Germany, and the UK still want to trade with Iran despite the U.S. sanctions. So I'm not quite sure how all of that's going to work out. But as far as our price of crude, we had a good draw on our weekly EIA report this morning. The Houston Ship Channel is shipping out a lot of crude. We're dredging the channel here, and so those big super tankers can come in here and take it out. And Tanker Trackers was very close on their um, forecast ahead of the EIA report, from what the actual number was, very, very close. So they're monitoring the ships that come in and take the crude product out. So I'm still bullish oil, as is, clearly most other people are also. But we might see a dip. We might be very, very overbought at these levels, and it might come in a little bit. So I'll just have to be warning you to be careful because of this momentum is clearly coming off these highs. So we'll just have to wait and be patient. Trade the again, the pattern looks exactly the same as the Nasdaq did. You just wait for your signals. sit out. Don't take these signals unless you get the pattern, um, the white, white, green. And hopefully you're going to have that with the linear regression. And your chart is going to look green, 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 green on the market analyzer. I mean, and your lower time frame will have a green linear regression. We like to trade a 3-minute um, chart for that lower time frame linear regression, and that keeps you out of the trade when it's not operating. So you would be in this section and not trading that section. And this is what it looks like. Where did that go? Oh, that's just right here. This was earlier. I have to apologize. This is way too big of a bar. This is for the Nasdaq. We need a bar like this for the crude oil. That was the little bit for today. And so here you see the white white and it brings it up. There we go. So that's what you want to be seeing, and you saw how choppy it was um, anyway. But just a very short trading window, and then it went flat and down. So take your time when trading. There's really no reason to be in a big rush. We want to make sure we have it right, and recognize when the patterns are changing, and sit on our hands and not try to chase things up when price is not likely to be moving, but just drifting around and chopping up and down. So we're having a lot of success in the trade room. Come check us out and see what everything is about. I've heard that we might get into a late July, early August first release of Ninja 8. So we're all going to be busy getting the templates ready. I have some updates to the high-low 2 for you coming out really soon that I'm very anxious to talk about when I have our webinar at the end of the month. So be sure and register for that on the website and or watch for Shark Indicator's invitation, and we'll show you some improvements to the high-low 2 template. Thank you so much. We'll see you tomorrow for CPI. Take care. Bye-bye.